So today I am going to teach you the goodwill calculation. Okay, so how do you calculate goodwill? Actually, I have made a video on this. That is the basic video of goodwill. So in this video, I'll going to solve a question. Okay, so you can see this is a question. Okay, now let's start. Okay. So in this question, first we can see a balance sheet, okay, of a company, but the date is very old, so ignore the date. Focus on the question, okay. A balance sheet is given, and some additional information is given. So we have to find the goodwill with the help of this balance sheet and additional information, okay. So first of all, tell me, how do I calculate goodwill? Okay. So to calculate the goodwill, we have to find the capital employed. Okay. So first of all, we have to find the capital employed. So tell me, capital employed. Okay. So what is the capital employed? Do you know what is the capital employed? If I teach you in a simple manner that capital employees is nothing that you can see, this is a balance sheet, this is the liability side, and this is asset side. Okay, here is the fixed asset and current asset, and on that side we write the what, capital, and here current liabilities. Okay, so if you add the total asset side and decrease the current liabilities, it will called our capital employed. Okay, so capital employed is our total asset minus current liability. Understood? So tell me, what is the capital employed? Capital employed means total asset minus current liability. Okay. And on the other hand, you can say our capital means capital, reserve and surplus. All of these are accumulate. We called what? Capital employed. So we have two way to find out capital employed. One is the total asset minus current liability, and another is the total capital is our capital employed if there is nothing is changes the value in the asset side or liability side. Okay, so this is the simple format to find out the capital employed. Okay, so in this question we have to find out the capital employed. Okay, so first read the question. First is given that shareholders fund is share capital to how much is not necessary. Okay, the total share capital is given 20 lakh. Reserve and surplus, there is two types of reserve and surplus. One is the general reserve and another is the profit and loss account. General reserve is 6 lakh and profit and loss account 3 lakh. This is our shareholders fund. Okay, then our current liability is given short term borrowing, means our bank loan. Okay, short term borrowing here given is bank loan is short term borrowing. This is 3 lakh. Trade payable means our creditor, 4 lakh. Short term provision for taxation is 5 lakh. Okay, so our total liability side is 41 lakh 50,000. Okay, you have to analyze the balance sheet first. Okay, then our asset side is given fixed asset. So fixed asset include these two types of asset. One is tangible asset. Okay, so fixed asset is only tangible asset is given. Tangible asset, factory premises, plant. Okay, so factory premises given 11 lakh 50,000 and plant is 10 lakh. Okay, and current asset, inventory, stock in trade, this is 15 lakh and debtors is 5 lakh. Okay, so if I tell you that ignore the additional information but tell me what will be our capital employed, so what will be your answer? Your answer will be, this is our total current asset, that is 41 lakh 50,000, and we should minus the current liabilities this much. Okay, that will be our equivalent to our shareholders fund. Okay, so you can calculate it. Okay, I am giving you the calculation. Okay, so I took my calci. Okay, write down 41 lakh 50,000. Okay, this is our total asset sides minus how much? 4 lakh plus 3 lakh, 7 lakh plus 5 lakh. How much? 12 lakh. Okay, so if I minus 12 lakh, so what will be answer? 29 lakh 50,000. Okay, and you can see here that is 20 lakh plus 6 lakh, 26 plus 3, 9 lakh 50,000. Okay, this is our capital employed. So you have to approach. One is the total asset minus current liability, that will be equivalent to our shareholders fund. Okay, another approach is our liability side approach. That time you should consider our only shareholder fund if there is nothing additional information is given. Okay, if additional information is given, that you should consider this additional information, that then you go to calculate the goodwill. Okay, so first of all, I am going to calculate the capital employed on the basis of two approach. One is the net asset approach. Net asset approach means total asset minus current liability. Another is the liability side approach. Okay, I am going to show you the two category. So first one, how do I calculate our capital employed? So we have to write here calculation of capital employed. Okay, okay. So I have written, and now we will put all the asset sides information. Okay, we will write all the asset side information. That is what is given here. Here given is factory premises, plant, factory premises, plant, stock in trade and debtors. Only these four are given here. Okay, so write it down. Okay, so you can see all four items I have written. So but I didn't write the value. Okay, I didn't write value. Why? Because of additional information is given, we have to consider the additional information. Okay, so you can see there are values are given, but we will ignore the value if there is additional information is given on that value. Okay, so see here that factory premises is 11 lakh 50,000, and you should focus on the additional information here is given or not about the factory premises. Yeah, factory premises is 12 lakh 83,000, and here 11 lakh 50,000. Okay, it means the factory premises is increased, so we will took the factory premises. Okay, we will take the factory premises, the additional values. Okay, okay, that is 12 lakh 83,000. Now plant. Okay, focus on the plant. How much is given? Plant is given 10 lakh, and focus on the here. Plant is given 10 lakh 40,000. It means plants is increased by 40,000. Okay, the plant has increased by 40,000. Okay, so we will consider this value, not of this. Okay, because this value is the my previous value, our old value. Now it is increased by 40,000, so we will follow this amount, 10 lakh 40,000. Okay, so plant is 10 lakh 40,000. Then stock in trade. Stock in trade is given 15 lakh. Here inventories means stock in trade, both are same. Okay, that is 15 lakh 50,000. Write it, 15 lakh 50,000. Another is debtors. How much debtors is given? Debtors is given 5 lakh, and additional information, I think nothing else. Yeah, so additional information is nothing about the debtors. So, okay, that time we will consider this value, 5 lakh. Okay, debtors is 5 lakh. So what will be our total assets value? Calculate it. Okay, so it will be 43,73,000. Okay, 43,73,000. So now we'll find our current liability. Okay, and it will be decrease from our total asset. We will decrease our current liability from our total asset. Okay, this is total asset after considering the additional information. Okay, so tell me, what is the current liabilities given? Current liabilities is given that bank loan, creditors, and provision for taxation. Only three items are given here. Okay, so write it down. Okay, so I have written all of my current liabilities item. Now I have to put the values of this item. Okay, now remain same. We have to consider our additional information. Is it given or not? Okay, so taxation, goodwill values, nothing is given. Additional information of these current liabilities. Okay, so I will write the values this of. Okay, okay, so I will write this of values. Okay, understood. So bank loan is given 3 lakh, creditors is given 4 lakh, and provision for taxation is 5 lakh. 3 lakh, 4 lakh, 5 lakhs. Remember, 3 lakhs, creditors 4 lakhs, and provision for taxation is 5 lakh. Okay, now deduct from this amount. Okay, it will be total 5 fours are 9, 9s and 3. What will be 12? Okay, so if I deduct 12 lakh from this amount, so what will be our answer? Minus 12 lakh, 31 lakh 73,000. Okay, 31 lakh 73,000. It will be our what? Capital employed. Okay, capital employed. Okay, so this approach we called our net worth net asset basis. Okay, so this method we will called net asset basis. So you should write here calculation of capital employed on the basis of net assets basis. Okay, but you should remember one thing, that if we calculate our capital employed on another basis, that is net worth basis, that time also our capital employed will be remain same. This amount will be find. Okay, so how do I calculate? We will calculate, we will ignore everything, only we will consider shareholder fund. Okay, share capital and reserve and surplus. Okay, so look here, first of all you should write calculation of capital employed on the basis of net worth. Okay, okay, I have written. Now I'll put all of the capital side information, means our shareholders information I have to put here. Okay, so it is given that our share capital, then general reserve and profit and loss account. Only three items are given here. Okay, so write it here. What? Share capital, then general reserve, and another is profit and loss account. Okay, so consider is how much amount is given here: 20 lakh, 6 lakh, and 3 lakh 50,000. Okay, write it here as it is. So calculate it. So what will be our total capital? Total cap Sorry, not total capital, that is shareholders fund. Okay, 26 29 lakh 50,000. 29 lakhs 50,000. Okay, now we have to consider our additional information. So in the additional information, what should I consider? I will consider the value of inventory, means the value of assets or liability which is increase or decrease. Okay, so on only this factor we will consider. Okay, now here you can see inventories are 15 lakh 50,000. Okay, and in on the balance sheet you can see the inventory, that is 15 lakh. It means inventories has been increased by 50,000, so we will consider only this 50,000. Okay, not the amount of this 15 lakh. Okay, so we will consider this amount. So how do I write it? So I will write inventories. What was our early amount? That was 15 lakh, and now 15 lakh 50,000. Okay, it means 15,000 is increased. So increased value will be added on our this item, this amount. Okay, so inventory is increased 50,000, it will be added on this item. If inventories are decreased 50,000, so what should I do? We will do this 15,000 will be deduct from this amount. Okay, understood? If our asset is increased, that time we will add it, that much value on this item. If our assets is decreased, that time we will deduct that value from this value. Understood? So inventories are increased. Now plant, how much? Plant was 10 lakh, and now it become 10 lakh 40,000. It means plant has been increased by 40,000. Okay, write it here. Plant increased by 40,000. Then premises, factory premises 12 lakh 83,000. Okay, write it. Factory plant, how much? We will consider the difference value. Okay, it is positive or not, you should focus on that. So factory premises was 11 lakh 50,000, and now it's become 12 lakh 83,000. Now tell me what is the difference value? 12 lakh 83,000 minus 11 lakh 50,000, I think. Yeah, 11 lakh 50,000. Okay, so minus 11 lakh 50,000, it will be 1 lakh 33,000 has been increased. Okay, so write it here, 1 lakh 33,000. Now add all of this item. Okay, because this item are increased, that's why I am going to add this much amount with this. Okay, so 29 lakh 50,000 plus this, it will be 90,000 plus 1 lakh 33,000. Okay, I think something is wrong. Oh, I have added 9 lakh, it will be 90,000. Okay, 29 lakh 50,000 plus 90,000 plus 1 lakh 33,000, 1 lakh 33,000, 31 lakh 73,000. Okay, because the answer will be same as our the asset side approach. Okay, 31 lakh 73,000. So we'll call it what? Capital employed. Okay, so we have already find our capital employed. Now what should we do? Now we should calculate our average profit. Okay, now we should calculate our average profit. So how do we calculate our average profit? Our average profit, for calculation of average profit, you can see the last 5 years profit is given here. Okay, last 5 years profit is given here. So considering this, we will find our average profit. If we add this 5 item and divided, if we do 5 divided by 5, that will be our what, average profit. Okay, so now I'm going to find out our average profit. So write it at average profit. So remember the amount, that is 4 lakh 10,000, 6 lakh 40,000, 7 lakh, 8 lakh 50,000 and 9 lakh. Okay, remember this amount. I'll going to calculate our average profit. Okay, have you remember it? Okay, now 4 lakh 10,000 plus 6 lakh 40,000 plus 7 lakh, then 8 lakh 50,000 and 9 lakh. 1 2 3 4 5, 5 years profit is given, so I'll divided it by 5. Okay, so tell me what will be the answer, means our average profit. 4 lakh 10,000 plus 6 lakh 40,000 plus 7 lakh 7 lakh plus 8 lakh 50,000 and 9 lakh. Okay, 8 lakh 50,000 and 9 lakh. So I've added, this is 35 lakh. If I divide it by 5, so our average profit will be 7 lakh. Okay, 7 lakh. Okay, now follow the additional information. Okay, so now you can see this is I have used. Okay, now managerial remuneration of 60,000 has been charged for each year. It means the manager took salary or remuneration, that is 60,000 every year, each year. Okay, so how much manager remuneration was? The manager took remuneration, that is 60,000 multiplied by 5, means 5 years he have taken. Okay, so that means 3 lakhs he have already taken. But remember one thing, managerial remuneration, we have to follow our corporate act 2013. Okay, so there are something limit is given. Okay, so you have to consider that limit. And here also given that manager remuneration cannot be exist 11% of profit. Okay, so if i if I take 11% of profit, so what will be our managerial remuneration? If I consider 11%, the manager can took the remuneration. Okay, maximum 11%. So what will be our total managerial remuneration? Our managerial remuneration will be uh, managerial remuneration, that is 7 lakh multiplied by 11%. Okay, uh, it means 7 lakh multiplied by 11%. So he can take 7 lakh, sorry, 77,000 rupees every year. He can he can take it. Okay, but question is given that managerial remuneration 60,000 has been charged on every year, so this much of amount is less than, means after considering the manager remuneration. Okay, so now we have to find out we have to find out our net profit before considering the managerial remuneration. Okay, these amounts are given after the managerial remuneration is charged. but we have to take our net profit before charging managerial remuneration. Okay, so how do we calculate? We will calculate our average profit is this much. So manager took 60,000 every year, each year. Okay, so if I add back, if I add back managerial remuneration, that is 60,000. If I add 60,000 on average profit, so what will be our actual net profit? 7 lakh 60,000. Okay, that was our actual average profit. Now you can give the managerial remuneration. Okay, now you can give our managerial remuneration. So our managerial remuneration will be 11% of this maximum. Okay, I am not entering into the law. Okay, if you want to know how to calculate managerial remuneration, you can comment here, and I will be give a video on that topic. Okay, so in this question you can assume that managerial remuneration not exceeding 11%, maximum 11% the manager can took the remuneration. Okay, so managerial remuneration will be 11%, consider it. That is actually our old law, old corporate law, that's 1956. In the 2013 the our corporate law has been amended. Okay, so now it become how much? 7,60,000 multiplied by 11%. 7,60,000 multiplied by 11%. 83,600. Okay, so 83,600. It means we can give managerial remuneration maximum this much of amount. Okay, if we give it to the manager, then what will be our net profit? Means average profit. Our average profit will be this amount, will be deduct from this amount. 7,60,000 minus 83,600. Okay, 83,600. It will be 6,76,400. Okay, 6,76,400. It is our actual average profit. Okay, but you can say it is a PBT. What? PBT means profit before tax. Okay, profit before tax. This is called profit before tax or actual average profit. Now we have to consider taxation. In the on the additional information, you can see that taxation may be considered 50%. Okay, so question says that you should pay the taxation. Okay, so I am going to pay the tax 50% of this much of amount. Okay, 67 lakh, sorry, 6,76,400. So how could I calculate? 50% divided by 2, it is also 50%. Okay, 3,38,200. 3,38,200. Now PAT will be, PAT means profit after tax. After deducting the tax, our profit is 3,38,200. Okay, now this is our PAT, means profit after tax. Okay, now we have to calculate our what? Super profit. Okay, so super profit equal to what? Super profit equal to our profit after tax minus, question is given how much? Normal rate of return is 10%. Okay, so you can calculate our normal profit. Normal profit means capital employed into normal rate of return. So capital employed our is 31,73,000 multiplied by normal rate of return. How much? Normal rate of return is 10%. Okay, so multiplied by 10%, it will be 31,000. 31,730. Sorry, 3 lakh. 10% means 10 is gone. 3 lakh 17,300. Okay, 3 lakh 17,300. Okay, that is our normal profit. So super profit equal to average profit after deducting tax minus normal profit. Okay, so super profit equal to PAT means average profit after deducting manager remuneration, taxation after considering this item. So we will call it PAT. Okay, 3 lakh 38,200 minus 3,17,300. Okay, it will become 20,900. This is our super profit. Okay, so how do we calculate our goodwill? So focus on the question is given. Goodwill should have valued at 5% years purchase of super profit. Okay, so 5 years purchase. So goodwill equal to super profit means 20,900 multiplied by 5. It will become how much? 20,900 multiplied by 5. 1,04,500. Okay, 1,04,500. This is our valuation of goodwill. Understood? If you do not understand, then you can knock me. Okay.